Welcome back to Equity Mates. We are now joined by Sam Gordon from Australian Property Scout, host of Scouting Australia and the Top 1% podcast, our local property expert to dig into where the property market is at for the quarter. Sam, welcome.
Boys, thanks for having me. Always a pleasure jumping back on.
Sam, now in these quarterly segments, we like to talk about, we like to get a market update.
Yes.
Where prices are moving, what do we need to know about?
Yep.
And I think the last quarter, it's been dominated by two words repeated from every news outlet over and over again. Rate cut, rate cut, rate cut. Will they, won't they? And then once they did it, what does it all mean?
Yes.
How closely do you watch the RBA? Like, how much were you yelling rate cut in the past few months?
It's a funny thing, mate. I didn't think it was going to come, in all honesty, just because, I didn't think we were really there yet from an inflationary perspective. Obviously, from a cash flow perspective and a property market perspective, it's great for us. It puts a little bit of extra fire in the market. Sentiment starts to improve. Obviously, from a cash flow perspective, every deal becomes slightly better, whether you already hold it or you're buying something new. But the biggest thing for us with rate cuts is buyer sentiment. So when it really comes into effect, we see buyer sentiment pick up almost immediately especially once that first rate cut came through. We saw it straight away.
So you've actually already seen sentiment shift.
100%. Yeah.
Okay.
It could, because I think the biggest thing is it's a realization that the hiking cycle is done, even though it hasn't been a hike for circa 18 months or so. I think it's people thinking that the easing cycle is going to start. Whether it does and how quickly or slowly it happens doesn't really matter. It's a fact that the hiking cycle's done and there's a bit of relief there. So we've had a lot of people sitting on the sidelines waiting for it. We saw pretty sort of immediate change in direction from that.
Wow.
So Sam, let's set the scene. Last time we spoke, Melbourne was falling.
Yes.
Sydney was flat. Perth, Adelaide and Brisbane were absolutely ripping, all
Charging.
up double digits.
Yeah.
Has that story changed at all?
Look, it's changed a little bit. So Sydney and Melbourne definitely still probably the most lackluster markets in the country at the moment. If we look at the numbers on those, over the quarter, down 1.4% for Sydney, down 1.8% for Melbourne. Over the annual, Sydney up 2.3%, but Melbourne down 3% overall. If you look at that and you dive into that a little bit, both of them from a quarterly perspective are actually significantly worse off than what the annual looks like. Sydney's annual at 2.3, but then the quarter down 1.4. It's obviously in that little bit of a correction phase right now. The interest rate will be interesting to see what happens with that, because the other thing with interest rates or market changes and market sentiment is that people are like, oh, well, maybe it'll kick again, so maybe I'll hold off. If they don't need to sell, they don't sell. And so I think that'll be very interesting to watch both of those markets. We're already seeing Melbourne start to bottom. Stock is definitely drying up down there as well. Days on market haven't tightened up too much yet. But yeah, they're very interesting markets to kind of watch from that front. I think Sydney's very unaffordable for what it is. It's the anomaly in the Australian housing market. But yeah, interesting to sort of unpack those two. Going on to the other three that you're talking about being Brisbane, Adelaide and Perth, which has had absolute blockbuster year-on-year growth for the last 3 to 4 years. If we look at the annual, they all still recorded double-digit growth over that period. So Brisbane up 11.2%, Perth up 19.1%, so almost 20% in that calendar year, and Adelaide up 13.1%. When you dive down into the quarterly data, that's where it does change a little bit. Brisbane up 1.3% over the quarter, Perth 1.9%, and Adelaide 2.1%. So all still decent, all still in growth. And if you annualize it over a year, you're talking kind of like that 7 to 8% per annum over that, if those growth rates continue. And obviously things do change, but we're definitely seeing a slowdown in that market of where they were, closer to when you're in the teens, up to Perth being almost at 20%. We're definitely seeing a slowdown in growth. Not that the market's going backwards or actually stagnating, but the growth rates are definitely slowing from that perspective.
Nice. Now, we sometimes get a bit of criticism for not remembering Hobart. So I want to ask you about the smaller capital cities. Hobart, Canberra, Darwin. What's going on there?
Man, it's an interesting thing. All three are they are seeing a bit of a contraction of stock. Hobart's an interesting one, sitting at literally 0% over the quarter, flat. Neither way, nothing, right?
Well, Hobart, if you want us to remember you, do something.
Do something. Well, annually they did something. They went backwards.
Okay.
So they went back 0.6%. In reality, very, very flat market, just not doing that much. Interestingly, though, from the data side, stock is starting to tighten. We're starting to see that a little bit nationally where markets are a little bit tighter, smaller cities, smaller capitals. We are seeing that start to flow through as well. Same as Canberra, same as Darwin. Doesn't overly mean that like we're going to see a huge growth rate or a huge run of growth or anything like that off the back of it. But they're all pretty much sitting very, very similar markets. They're all pretty much at that zero. I had Canberra written here as well, down 0.3% over the quarter, 0.4% over the year. So nominal, absolutely minute changes in that time frame as well. So interesting to sort of unpack across the fold there too.
So those are the capital cities.
Yeah.
What about the regions?
Regions have been a bit of a different game, and it's very isolated to where the region specifically is. We were very heavily in say areas like Rockhampton around about 3 years ago actually it would have been, and it posted across like the whole of the city last year, typically between about 20 to 30% growth last year, calendar year in that time frame as well. You're seeing areas like Mackay still with great heat and great affordability. Rockhampton's still got great affordability as well, so it looks like there is still good run in the tank there. Mackay's the same thing, still very affordable for what it is, very high incomes in there. And the other thing as well, a lot of people think, like they kind of say like mining towns or regional towns and all the rest of it. They're both like 80,000 plus people populations. Mackay in particular, the gateway to the Whitsundays, like a very livable place too, as well as having big incomes in the area as well. So I think areas like that still have a lot in the tank. If we throw another on top being Townsville, which has been a bit of a standout performer the last 2 years. Again, we probably entered around about that 2 to 3 year window again now within those markets too. It did across the board as well. You're kind of sitting the more salubrious sort of areas doing double digit growth as it is. Some of your cheap areas they're doing 25-30% growth rate last year.
Wow.
Now providing the weather events of January not affecting the market too much in that time period. It's also a very dead period in the market, so it probably wasn't the worst month for it to happen. Providing that doesn't affect the market too much from that perspective, they're definitely going to see like a continued run of growth. It's only heating up there. Stock on market's super tight. Townsville's 200,000 people population, some huge projects, a massive army base there, and only expanding as well. So, really kind of growing little economies there as well as the property markets too. That's Queensland, and there's a few others there in Queensland that are showing some really good promise as well. Regional New South Wales and Regional Vic are also like really rearing their heads as quite attractive looking opportunities too. They had a really good run of growth, or some of them had really good runs of growth in COVID. Some of them saw kind of 20 to 30% a year for over like an 18 to 24 month window. So they did have some pretty good little runs in there too. And then Regional Vic is shaping up pretty nicely. It didn't have the same sort of run that Regional New South Wales did. It had a little bit of a kick, not to the same level, but affordability is looking good. Both locations, pretty much all locations, you've got to take everything with a pinch of salt. They all carry a level of red flag in terms of if you were to throw the blanket over the whole state, it's not that every location in those states are going to perform really well, but there definitely are some that are looking, pretty attractive at the moment from both a vacancy rate perspective, an affordability perspective, and a dwindling sort of supply number as well. So there's definitely some really attractive looking options within the bunch.
Nice. So that's, I guess, a snapshot of how prices are moving.
Yes.
I guess the question is that is how they've moved. I guess the question is, how do you think they'll move from here?
Yes.
One rate cut down,
Yes.
sentiment improving, supply is constricting in a number of areas, as you're saying. I would just, off the top of my head, a combination of sentiment improving, and supply dwindling.
New government could be interesting.
It does feel like things are shaping up in some areas.
Yeah, man. I mean, the market's always a two-speed or a multi-speed market, right? It's not like the whole market works in unison. Like some people might be a little bit clouded by that because of what happened in COVID. But
and the media speaks about the Australian property market.
100%. But in reality, it doesn't work like that at all. And you got to drill down. I always look at LGAs, the council levels. Even in a capital city, you always want to understand from a council level and a council perspective as well. They're really, really important. But yeah, man, I think the biggest thing that'll come from the rate cut side of things is that sentiment shift. The more sentiment shift, the more people that feel confident, the more people that got a little bit extra dollars in their pocket, or that property is going to cost them that little bit less a year to hold and to put into the portfolio, and the equity release and all the rest of it. It just increases that sentiment to want to go out there and do stuff. And I think the first one's like, it's definitely put some people looking properly at it. I think if we see another like 1 to 2, even over the next 12 months, those next 1 to 2 will be very interesting to see what happens in the market. I think a lot of affordable markets, you might get home buyers who've been sitting on the sidelines and just start flying into it as well. And investor sentiment is driven, especially like lower level investments, like lower property portfolio investors, they are very much driven by cash flows and like a worry about it either side. Bigger portfolios don't really worry. Bigger investors don't worry about it too much because it's all just the changing of the winds. You know what I mean? It's just relevant to what's happening on the day. But in that kind of lower portfolio level, you see a lot of people they do very much get affected by it and what they're looking to do with it as well. So I definitely think it will have an impact. Just how much of an impact, and that'll really come down to the RBA and what they decide to do. So.
Yeah. Well, if people want to keep up to date, you'll be jumping on each quarter to tell us what's going on in the housing market. But if they want to hear more regularly from you, you've got the Scouting Australia podcast where you talk all things property investing. You've got the top 1% podcast where you talk all things high performance.
Yes.
And if people want to speak to you and the team at Australian Property Scout, they can do that as well.
100%, man.
So, Sammy, thanks for joining us.
Boys, always a pleasure. Thank you.
Thanks, Sam.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.